Good morning. Welcome to another episode of the show, the Wealth Clinic show. And of course, in the usual manner, we're going to start off with the stock market updates, talking about yesterday's results, top gainers and losers. And we're going to review some half-year results that actually came into the market during the week. And we're going to talk about SEC, that's Security and Exchange Commission, planning on digitalizing their operations and why it should concern us, the benefits that is meant to accrue from this step. All of this after the break. Stay with us. Welcome back. So we've got the gainers and the top losers. Of course, I have Ambrose Omodium in the studio. Ambrose, investment analyst from Invest Data Limited. Ambrose, how are you?
I'm very fine.
My co-host, of course. I cannot do this without you. Apparently. Thanks for coming on board today.
Thanks for having me.
Okay, so we've got top gainers. We have Berger Paints leading the pack. I wasn't expecting that. And then we have Mutual Benefit. That's not surprising. Unity Bank, Okomo Oil, Oando. Okay, this Unity Bank, this touch and go, just do what you want to do and get out of it. It shows that it's maybe basically the activities of people that just want to make money in and out from the little volatility that is involved in the stock moving up and down. But I don't actually see it as a stock for long-term investments, except, of course, we see a change in the operation. Then of course the losers, we've got Total, we've got Seplat, all topping. That's not surprising too. I mean, they're just trying to get out of this COVID situation that actually affected them a lot. Then we have MPFA Microfinance Bank. I wasn't expecting this here, but of course
profit takers are
doing Oh, you guys. Then we have USCN and then we have Julius Berger. Okay, so top 5 gainers, losers. Is there anything we need to be concerned about, or none of this is surprising?
You know, if you look at the market performance, let's say from Friday to date, it has been an up and down movement. You know, we see kind of, I call it oscillating trend. Why? Because it go up today, the next day is up. Market was down on Friday, on Monday, market gained powerfully. On Tuesday, market was down. You know, all this, up and down movement, at times it shakes investor out, or people like trader, they worry where is the market going to because they are confused. But for me, it's not a new thing. When we are seeing earnings coming to the market, this is the season for earnings, and as the results are coming, investor will treat you where you belong. Why? Because it's this number that will support whether you pay dividend or your price will move. Like I always tell people that, in equity market, stocks feed on information, and information they feed most is this earnings, because this is what we call 20% factor that drive equity prices. Apart from liquidity and etc., but what really impact price direct is what is your earnings. And this earnings, when it is coming, investors want to look at it and say, oh, is there a progress or are they declining? And that's why in investors have what we call quality earnings, the criteria for quality earnings. You must look at your top line. Is it going up or is it going down? Look at your profit margin, look at your bottom line, also look at your operating efficiency, which is cash flow, to see whether the company is cash flow is to support the earnings. But if you look at what you just said now, the numbers that the market data that just came, if you look at on a sectoral performance, it's just the the insurance sector that gained from that activities yesterday. But insurance recorded about 0.43%. Why the oil sector is one that depressed the market. It dragged the market down because stock like Seplat and Total were on the loser chart. And why? Because of this falling, oscillating crude oil price, and also the sector numbers have not been impressive since last year.
It's shocking.
For that, investors are moving away from this oil sector to another sector. That's why we call it sectoral rotation, trying to look for where there is value as we speak now. That's why I see, in terms of look at banking performance, look at the goods and the industrial goods. Industrial results have been good. The one that released so far, really from the Dangote cement and from Lafarge, and that moved the market on Monday. And because this big winners slowed down on Tuesday, market was flat. Because this, for me, investors should not panic. But what you have your goal, and the kind of stock we should invest in at this point. But this number is going to review or give insight where you should be targeting against what end of the year. We're already in the seventh month of the year. That means we have less than 5 months to cross to another financial year or another year entirely. For me, investors will look at, oh, with this side of what I'm seeing in this second quarter number, half-year number, where will I be putting my tent now? Is it I should go for banking sector? Should I go for no? Also, don't forget that in this kind of market now, I said earnings is another major factor that's going to drive the stock prices. And there are some companies that are going to pay you trade dividend. How are you going to position on them? That is why when we are discussing the earnings, we'll tell them this is how they should go, because those companies are going to pay trade dividend, their result will be coming in August because they need to audit their account. But why others that are not going to audit their account, between now and Friday, despite that tomorrow and what's it called? Friday is public holiday. They still be submitting their result through online platform. And because SEC and NSA are giving them also the grace to extend to August because of the COVID-19 issue, they are likely to also release the result early in the month of August. For me, investors should just sit down, have your strategy, take advantage of these numbers, and position your portfolio.
Thank you, Ambrose. When you said investors should not panic, I just like, okay, when examples they were going to say investors should panic? Because don't answer that. I was just talking to myself. Investors should not panic. How do you say it again? You have this political language when you don't want to say don't buy. Anyway, thank you very much, Ambrose, for that. It's obvious, Muchab, I was expecting Prestige Assurance to also probably be on the beginner's chart because of their results.
They didn't get up to that percentage.
Okay, so they didn't meet up to that.
Top 5.
Okomo Oil, interesting results. So I think we should go into considering
the numbers.
The numbers that actually came during the week. Okomo Oil actually released their half year. Okay, for the sake of verification, half year, that is January to June.
Exactly.
And it actually consists of Q1 and Q2. That's Q1, January, February, March, then Q2, April, May, June. Together, that's half year. So that's what we're considering. We've talked about Okomo's of Q1 before, and now that's Q1 plus Q2. That's what we're looking at now, half year. And you see that 2019 against 2020, they actually grew their turnover. Very, very impressive, 50%. And according to the explanation given, is actually from increased local sales. Their local sales actually went up by 67.9%. So this is actually from local consumption. Exporting was not really so fantastic, especially when it comes to rubber. The rubber did not do fantastically well, and it's not about them, it's not peculiar to Okomo, it's a general world trend, global trading trend in rubber. So, but we can see that the local sales actually made impact on the results, and they were able to grow their top line by more than 50%. And profit after tax, well, comparing 2019 to 2020, actually came down by 200%. The explanation given was that the cost of fund, they took a long-term loan last year, and the cost of fund actually drove up their operating cost by 416%. That's a lot, but you still see that for a stock like this, if they didn't give a good explanation, or if you can't understand why this went up, I'm sure Okomo will probably not be on the gainers chart. But we understand that that cost is actually from cost of funding, of expansion. And we also understand that, yeah, loans, interest, you might have to begin to pay it earlier than when the impacts begin to reflect on your business. So I'm thinking maybe from next year or later this year, we should expect a more fantastic result than this from Okomo Oil.
Actually, if you remember when we were discussing the first quarter, I said something that the MD came out to say that the demand for their products, is in the next 3 years they should be supplying or meet up because of the closure of border in August last year. That triggered demand because they are the one producing within the nation. And the number you just see now shows that it's a mixed performance. Fine, it's not a bad one outrightly. But when you look at what is important in any company, is that when a company is able to grow its top line, when you say that means you are eating into another people's market, you are expanding to a new market. You can see what we are saying, that growing your top line with almost 57% shows that yes, this company know what they are doing, they are expanding their sales. But when a company says it's going up by 2%, 3%, it's when it's still struggling.
It's not better than when I'm going down by 2%.
even when your operating efficiency or improvement, cost management give you a huge bottom line, you can say we accept it for the first time, but the third time we won't, because that means you can't support that positive earnings you are giving us at the bottom line, because we are not eating to another person's market, you are not expanding your market to bring more sales. But from what we saw in Okomo, you see that this company is really expanding their sales. That means the cost of finance that eat up their bottom line is for a while. And I know when states increase and they're able to manage, improving their management, now that the sector is also going to, among people that are enjoying this, 5% intervention, I think it will also further improve their performance. For me, the stock is a place to go. It has been a defensive stock for a long time. Even yesterday, the result came, it gained almost 4 naira. It tells you that the market did not even treat it the way the result came, but it tells you that market have confidence in commitments of performance. For me, and also as an analyst or investor in this market, there are some that you can play like defensive stock and you go to bed and sleep. At this stage, you go and sleep and close your eyes, you'll be watching the when I mean go and sleep. When I go and sleep, now relax your mind. Don't be panicking, but this number, yes, is a bit down, but I bet you at the end of the day, you still expect dividend from Okomu for long-term investor. That's why, also their holding structure is for part of what support their price. That's why yesterday you can see that the price was up. For me, it's not a bad number actually, but I think a missed number that we can pardon for now. But when we see in third quarter, before we conclude.
No, you can't jump. No, the kind of sector they are in, yes, I don't even expect to begin to see this even this year. As me, COVID wasn't there.
Yeah.
We need to please give them space. Maybe because I just like Okomo, but just give them time. I know, I believe they know what they're doing. They're in a very fantastic sector.
Yeah.
And over time, they've shown to surprise us positively based on their results. When I said they took out loan last year, and the cost actually pushed up their cost of operation this high, I was like, okay, could they have used retained earnings? Then I thought, if they use retained earnings and they don't pay stock, they're like, oh, maybe all this time they were paying us just a fluke, so please just leave them.
No problem.
At any point in time, Okomo Oil remains a stock that, personally, I like. Sector, people will always, funnily, people will always, they are more like consumer goods as far as when it comes to food and all that. And I know they have a lot of potential to actually expand. So,
they are expanding.
How much to see Okomo getting 300 naira?
It's possible because the way they are going, open more plantation for their palm and all those. Or not only in Edo, other states like like Cross River, they are expanding. That they know what they are doing.
How much is it now?
No, it closed yesterday at 74 naira and something.
There was a time that stock was less than 20 naira. Let's not go there anyway. Okay, the next on the list, Julius Berger. Okay, not a fantastic result there. Revenue was down year on year, of course, year on year by 20.56%, and profit after tax was down, and actually profit after tax was actually negative. I don't know what is going on there. Is there any other information to back this up? It's not surprising we are seeing them on the losers chart anyway. Yes,
but even the market entry and the way the result was, because if it to be other stock, I know the market would have treated like 10% loss. Imagine it's not even what. So about 5% loss. That means markets are still constraining some things in them. One, also you can look at that, in an economy where they will have reviewed our budget like almost 4 times now before finally signing it into law. And this is a company that depend on government because they are the one that had the highest spend in terms of capital project and all that. Now they are costing even their capital project because of the environment we are now, the COVID-19 issue. And also the company also saying that foreign exchange loss is part of what that eat into their profit after tax. But once you look at their bottom line, they didn't grow it. Their top line, sorry, they didn't grow it. It means that they didn't even get more contract and all those stuff.
But you just said that it's pretty difficult for them to get contracts.
That's what I'm saying. For me, the only good thing is that they have good reserve. Towards the end of the day, they might have to maintain their dividend pay. But for me, this number is not a good one to look at now. But for those that know where they let the price come down, we can now know what to do. This is a company that I know that I can bounce back because why? Government will continue to, once we're out of this COVID-19 issue, by 2020, we'll start in a better budget and all those stuff.
Okay, I know J. Berger is not into retail business. No. They are almost very much dependent on government, but don't you see that as a risk factor when you're dependent on just one class of persons? Meaning if the government of this day checks out and doesn't look at you anymore, what happens then?
The way is that even any government that will come, if you really want to drive your infrastructure development, you need capable hand. And because of their name, Julius Berger has always been there. With them coming, they'll always be there. And Nigeria, why again that are there? This company have shown strength, and their expertise has been displayed. if you see the road that Julius Berger will do for you, or you will know that this is Julius Berger. For that, they always stand that no government want to put them.
Are they the biggest construction firm in the world?
No, in the world.
So, is there anything that stops another construction firm from coming into Nigeria?
Well, fine. Also,
that's my point.
I'm not saying that. Let me tell you, even the private sectors are also pressurizing them. Depends on your capacity. It's not because some private sectors that because of their cost, because it's a company, but some are still, if you look at some people building a big hotel all over in Abuja, not that because everything slowed down now. They have other business they're doing, but for me, it's just because the situation, government situation is part of affecting them.
Well, I'm always afraid when I'm dependent
on
or a business is dependent on one source, and the business is failing that because I used to be very good and I'm still very good, so government will always use me. You can't always say government will always use you. You might be the best and government can choose to not use you.
For another one that have
another bigger company can come and they just feel like, you know what, I'm just tired of using. Are you guys the only one? That's the reason. I don't want to use it because you guys have been there for so long. Can we use somebody else? So what happens at that junction? So I think J. Berger should actually look inward, because when government is in shock, they should not be in shock. Well, because what I'm saying is their revenue and top line is directly commensurate to the government else.
Activities.
Yeah, so when government goes down, they go down. When government is up, they seem to be up. I think it's a very risky thing for them to. But if they've been surviving it for how many years, I don't know.
To review, we have not seen this kind of COVID-19 for how many years now. They should review their business strategy. They should review their business strategy. Let them review it.
All right. If you're just joining us, it is still the Wealth Clinic show, and we are talking about earnings results released by some companies to the Nigerian Stock Exchange during the week, and next on the Intercontinental Bureaus. Okay, Intercontinental to half year 2020. That is a company. Let's leave the stock aside. The company that actually went from loss after tax of 6.8 billion half year on half year to 9.36 billion. So this time last year, half year, they had 6.8 billion loss after tax, and this year they're having 9.36 billion. Interestingly, 2018 they had
2 points
negative 2 point something billion. So they've been consistent for the past 3 years to grow their loss after tax. I don't understand.
Yes.
And I've not seen why this 9.36, but the why for the 6.8 billion of last year was categorized basically under like three areas. They said their cost of sales went up.
Down.
Went up. Cost went up, so it hit into their profits. And the cost of marketing and promotion. Now I had issues with that. Then administrative cost. What's that? So much so that it ran your profits down into negative of billion, and for 3 consecutive years, half year to half year, you've been recording losses. And now we have 3.3, so 2 to 6 to 9. Maybe next year, maybe 12 or 13 or something. Intercontinental Breweries, what are their products? Not beer or something? Are people not drinking anymore?
Is it Hero they call this? All they drink.
I thought when people are sad, they drink. When they're happy, they drink.
No, now it's a function of your income.
I'm sure their beer is not the most expensive in the market.
But it is when you have money that you can drink. Actually, what I am concerned in this, the international bureau is that this is a company that came out 2 years ago. They did right issue. They collect money for the public. They merge with different, other brewery companies to become big.
They're actually under a bigger.
Bigger group. To become a bigger brewery company in Nigeria. Not only that, they have international investors in the board of them or in the management of that. But the good thing is that this company, if you sit down and look at for the past 5 years, you are saying 2 years, 5 years, their result, especially their earnings have been what? Have been dipping and gone worse and worse on a yearly basis. And that also reflected on their performance in terms of price. Price have moved from 21 naira to even as low as 3 naira 40 kobo.
3 naira?
Yeah, 3 naira 40 kobo. That means investors are becoming more wise. They are not looking the way where they put money and their money will be going down the drain. Now it's for investors to always treat companies like this, because they came to the market, they do right issue, they march, they do. When you march, you enlarge your share in issue, and your performance has not moved to accommodate what you have additional shares to impact on your numbers. For me, I think the economy also have helped them to further go down, because now that the penetration power of many Nigerians are low, I think the first thing people should think now is how to eat and people, not how to drink. And also,
do you drink?
No.
So don't speak for people that drink.
Wait, I'm coming now. No, even if you look at the industry generally. The industry, the sector generally, look at Nigeria Brewery struggling with their top line. Look at Guinness struggling with their top line. That means it is not only issue of international brewery. It's a sector because I'm telling you, if you want to measure, how the economy is doing, if you look at the consumable goods, sector.
I wish I could agree with you based on sector, but 2018, what happened? They were negative profits, loss after tax. That's negative profit after tax.
I said the last
2019, same thing. 2020. So don't let us hide them under this COVID thing.
I said the last 5 years, the sector have been dragging feet. Go and check Nigeria brewery performance. Have been on the dwindling, the Guinness dwindling. That's their price. The last 5 years, their bottom line have been
How many of them are having loss after tax?
No, those ones. Those ones that if you are not having, for example, Nigeria brewery that have been posting good, fantastic numbers. Now their numbers are not as impressive. They even decline on deliveries. There's something wrong. It's because they are bigger than them. But I'm telling you, it's not. This one is that yes, they might have issue of cost, as you just said that their cost of operation was up, and they give reason of other things. But
marketing
for me,
and promotion.
Sure. Then if you are marketing something that's not giving money, why are you marketing it? It doesn't make sense. That means they really want to sit down and look at their business model and adjust. Because for me, when you are carrying a big, you say you have a high capacity, and that capacity is not yielding something, you need to review. Should I go small? Because they merge with almost 30 brewery companies to become bigger. And since they merge, we have not seen the impact of the merger. They need to review their merger agreement and all that, or their merger clear and see what was. It has not changed the operation.
It's better to be single than to be married when you're going to be worse.
When you're married and the thing becomes, go back to your single status.
Okay, so if you were to advise investors now, because there's something we call averaging up or down. So when you buy at 10 naira and it goes to 9 naira, you buy more, goes to 8 naira, buy more. What kind of advice would you give to people that are actually here? Should they buy more to average down the cost? Or what?
You have the spirit to buy more into a company or to average down when the factors that attracted to that company are still intact. But if those factors are not there, why are you averaging down? You're going to even seek your fund and your waiting period will be elongated. Why are you doing that? Well, you just sell off, cut to your loss, because coming out from this will take time. Go to other places, because there are other investments. This is not only stock in there. For me, you don't need to average down this kind of situation. You sell off. When you see that they start bouncing back, you can come back again. Well, not because you love them. I told you that stocks or investment is not woman that say you want to marry and who. Once they are not doing, the stock not doing well, leave it where it is, move to the next one. There are more than 180 listed equity on the exchange now.
Thank you, Bruce. I was thinking you were going to say something else before. Thanks for not being political. Okay, up next, Lafarge. 2019, comparative to 2020 half year, went up by 2.2%, and then profit after tax also went up 47.29%. Of course, looks like a lovely results, but cement, I wasn't expecting this kind of good results from cement half year.
Okay.
I was not, we just came from JVA that
yes,
into construction,
exactly.
So except there's something extraordinary that actually ran the profit after tax up. If not, then this is a good result in the face of COVID.
Yeah.
And came out with this.
Yeah, I would say this is a misnumber too, because like I said, I will have a criteria to say this is a
because
number.
turnover was minimal, but we are coming from
a very bad situation.
So 2% is like a fantastic
Fine,
stuff.
I agree with you, but also I would say this result is the power of decision. When they decided to sell off their South Africa operation and operate in Nigeria, it was a bold decision, and we can see the part of that decision. They cost their loss, at the same time cost their cost of operation. South Africa was eating into their operation, and the cost was bringing Nigeria operation down, because on that they decided, okay, let's leave South Africa, let them go there. They sold it off and they look inward. And also, if you look at what happened between that top line and the bottom line, there's efficiency, operation efficiency, you will notice there. And also, their cost of finance dropped from 15 billion to about 5 billion. That means that cost will really impacted positively on the bottom line. We have seen almost a 47% growth. It's a good one, but subsequently, I think they can sustain it. That is a company and investors should be looking at. If at this season they are doing that kind of result, that means let's look at that. And also, if you look at the industry where they're operating, look at the price of Dangote cement, look at the price of Boa, and if company like WAPCO or Lafarge is giving us 1 naira 47 kobo for second half, for the first half, that means after 2 months, it's an insight that they can likely hit 2 naira or 250 end of the year end of the year earnings. Then the investor can expect a dividend in the range of 120 to 150 at the end. And this company have been consistent, even when they are posting negative, they still pay dividend to investor. To show that for me, the price is low. And also, if you look at the earning seed is about 13% earning seed. It's good. We can take advantage of it.
That's interesting. Dangote Cement also, the turnover was up slightly, 1.9%. Profit after tax was up slightly to 5.79%. So I think it's also a cool result in spite of everything.
Yeah, no, if you look at it, for me, like you just said, it's fair. So let me board because of what is happening with the board, because of the company capacity. I think we can give it to them. Be able to manage and give all this kind of flat number. It's good that they are not dipping or they are not in red. It's a good one. But the good thing is that, as you look at this number now, investors will start thinking the price that moved when they all came to the market. The price that moved from almost 122 naira to about now, 41. Just because of this number. And only that, this is a company that has a buyback scheme for 12 months, which whether they've started or not, but I know it was approved by their extraordinary GM early this year or late last year. If it's 12 months, that means it will run for this year. And for me, investors should look at, because we are going, you can still expect dividend from Dangote Cement. And the number is okay. It's fair, but only that, for me, it's still not a quality number, but see, as we just go, let's just say it's okay. Because you need to look at company, if you look at the profit margin here, you look at their profit margin. We also look at the operating efficiency. It's okay, a little, but what matters is that the operating cash flow is still looking up. That is the good thing there. That means you can support the earnings going forward. But as an investor analyst, after we are looking at company earnings bottom line, their profit status, look at their balance sheet, you go for their cash flow. That cash flow is very important. You need to know, will the cash flow of this company support the earnings going forward? If not, that means you should also adjust your investment decision.
Thank you, Ambrose. Well, I have to say that they are not in the banking sector. It's not a volatile sector. Yeah. And if they can still come up with 2-point-something%, I'll give them a pass. Really. Because I wasn't even expecting this. I was maybe expecting negative or,
No, it was even from Labach, from Dangote, they are surprised.
When is BUA coming?
But they have this period between now and end of August. We should expect Boa Cement in the market. And these are the big boys in the sector. Let's see how the result look at. These two leaders have come so far have shown something. But like what I said earlier, their price now for you as an investor, look at if this sector, now Dangote will give you, let's say they paid 16 naira last year, and now Lafarge is selling below 13 naira. And it's having an earning per share of 4 naira, 47 kobo already. And boy, it's always around 39, 40 naira. You should like tell you that price of your stock give you an insight what to do as an investor.
So your dividend, your dividend per share.
Yes.
Because dividend might look absolutely big, absolutely. Yeah. But when you compare to the price at which you bought, it's actually lower. Okay, fine. Insurance sector now. Insurance sector is surprising us all.
Yes, sir.
Because I guess that's a case of a child that you always complain about, and just turn a new leaf. Like, really? So you had this in you? I mean, they pulled the market up, and now they came out with this result. When Prestige and Mutual Benefits, when their Q1, we're like, it may not be this fantastic in Q2. And now they are here half year, which is Q1 and Q2. And Prestige, for instance, grew their gross premium 2019 against 2020 by 4.65%. So they had 39.13 billion gross premium, and profit after tax also grew almost like 100%. There is not up to 100%, but almost. 2019 to 2020. So they came up with 620.35 million. Profit after tax, and that's about 79.26%. This nice for insurance sector. That's Prestige Assurance.
Yes.
For insurance sector, this is nice. I wasn't expecting it, and I'm wondering. We thought people weren't doing insurance, so what is going on there?
they're like I told you before we came up that this is a company that most of their business are from the Indian community, and because they are in Nigeria and they do business more, and also any business that has to do with coverage, because this India business, they have another insurance company in India that is big. Just like having investment in Nigeria too. That means they can serve business. You can see that their top line is in billion, but you can see that their private sector tax is in million. That means for me, the cost efficiency there is what I'm looking at now. If you are making billions and you are giving me...
Don't steal my point. I was not trying to convince you of their operating cost before we came.
No, I'm not looking at it now.
Okay, so now you're just thinking it.
No.
I mean, how do you go from 39.13 billion to... But this, let's just look at it like prestige. It will become more interesting when we begin to compare them to mutual benefits.
Yes.
That's when we'll be like, okay, because looking at 62.35 against 39.13, it's not even up to 2% profit over tax, the percentage to your gross premium, because 10% would be 3.9.
Yes.
So this one
no, tell that the profit margin is low. That means the efficiency.
What's going on with the operation in between the cost?
Yes, the cost. Well, even I'm even looking at the number critically now. You know that even the 37 billion to 39 billion, you know, is still something that is huge. Or less it's 3.7 billion and 3.9 billion.
Yeah, I don't even have issues with their cross premium. I mean, it's in billion and increased by 4.6%. No issues there. My concern when I saw this result was, between gross premium and profit after tax, I think what happened there? What are the costs that actually drove this down to? It's not even up to 5%. Profit after tax, not up to 5% of gross premium.
Well,
to me, that calls for concern. I'm concerned.
I guess this figure should be 3.7 billion and 3.9 billion, because the margin, the difference between the PAT and the top line is huge.
So maybe this statistic is wrong.
Or the person that captured it didn't get it well.
But I almost thought about that. Then I saw mutual benefit. In scale of being big, which is bigger, prestige or mutual benefit?
If you look at this figure, this from the data from mutual benefit, this you can look at activities here now. It's communicated that you can see from 9.68 billion to 10 billion, 4.9 margin up, and the PAT also up by 9. Yes, the numbers, as I say, generally, if I look at it, I say this number is below no expectation, but because of the industry where they are and the economic situation, we're expecting that people will not be able to pay premium now, and that will eat into their activity, into their profit. But for people are saying that the sector that people are looking down is coming up, and I'll tell you one reason why this sector is still looking up, like, is because of the recapitalization exercise that is still going on in that sector. They are trying to let us know how good they are, so that you can know, because when a lady is going out, they need to dress well so that you appreciate her. This company, they are giving
saying that this is just flash in the pan? We should not.
No, if you look at this company also, like mutual benefit, if you look at their full year number, was fantastic, and they didn't pay investor dividend. And they say good more, you know, if you look at their full year, say, well, but no dividend was going to investor. Why? It was when they want to do right issue 2 years ago that they pay investor 3 kobo. If you know you are solid and you are liquid, you need to pay dividend. That is really to say investor thank you. Because the figures are looking good now. At the end of the year, they will not pay dividend again, because 2019 the result was fantastic for mutual benefit. Yes, this second quarter now, I would say it's a bad result. It's not a bad result, because if we consider the environment we are now and the sector, because I'm telling you, people can put premium aside first and look for that thing important for. But if they are still maintaining such a performance, it's good for them. But let them reflect by rewarding the investor. That will make the stakeholder of that company to know that yes, this company is really liquid. But when we are bringing number and we are not seeing firm moving, if you say you are liquid, it is when you pay out money to your investor, we know that we are. But when you are giving us good number, you know that something is wrong somewhere.
Okay, that's interesting. All right, that's about the results. Apparently, insurance sector, they are stepping out. We need to look for another scapegoat soon. If insurance is stepping out from
the oil is entering.
No, by the way, they are big boys. Please, those ones, they can never be that. They are too big. I can't see Seplat at tuner. Is there a war? No, I can't see
Seplat 5 years ago touched about 80. It's not new.
No, I'm just saying that. Okay. Insurance in terms of price,
okay.
Stay away from insurance. They have 50 kobo. It's like bond.
Yes,
50 kobo in the next 3 years. 50 kobo. I don't see that happening to the oil sector. Okay. Of course, there's Total. Yes. Total. The results wasn't fantastic, which, of course, not surprising. 2019-2020 went down by 29.25%, and profit after tax was actually negative in billion. Wow. All right. No, it should be million.
That was million, yeah.
It should be million.
That's
but
million.
It's still negative though. But again, that is not surprising. The sector where they are, that is not surprising. But we are hoping that when this issue of COVID really dies down and all return, let's hope that there will be no other substitute to oil.
Yeah.
You know, because that would be
a big blow.
Big blow. That would be a longer term than COVID issue.
Yes, I agree with you. But one thing is that this oil marketing company in Nigeria, they are even struggling. I will tell you, despite that the government here is, pump price today, coming down tomorrow. This company are suffering. If you look at all the numbers from that sector, starting from ethanol oil, apart from Mobi, that was a bit better. Others, first quarter are still struggling. It should have, but part of total have been from 2019. Throughout they were struggling, but 2019 because they have enough, they were able to pay dividend of 6 naira 47 kobo, fine, because from their reserve. But now it's a sign already that investors in that sector, in that company, should also be thinking that why? Because the price even lost 10%, yesterday because of all this bad result. For me, investors should start doing what I call sector rotation. Go to where you know that there's no possibility of you making money. But you can't actually run away totally. As you are running to that sector, look at this setup, because there's a price they will get to, they will start bouncing back. That's why you will be a good investor. Look at set your goal. Oh, at this price, I'll be entering the stock. I will be watching. That's why you have a watch list as a trader or investor to know the exact price you want to do that. Look at your technical analysis. Look at the last price they touched. So if you touch that price again and it bounced like 2 times in that same price, that level, because that means it's about to take up again. You can join it really, even though the result is bad. That's why we trade the news in equity.
Thank you, Bruce. All right, so we're going to short break, very short one, and when we return, we talk about SEC digitalizing the operation. Sure. That's a long time coming. All of this after the break. Thank you. Welcome back. It's still the Wealth Clinic show, and on this segment, we talk about Securities and Exchange Commission digitalizing their operations. And like I said, it's a long time coming. But first, SEC, that's Securities Exchange Commission. Let's talk about their role to investors first. That is protecting integrity of securities against abuse by insiders, e.g., insiders dealing, and of course, preventing fraudulent and unfair practices in securities. How can you rate SEC? What mark will you give? Before we even talk about digitalizing, based on these two roles that they're supposed to serve investing public, will you say they are actually doing fantastically well? Because can we guarantee there are no insider trading? I can't.
For now, I'll tell you, it's long I hear such a...
Of course you won't hear it. For you to hear it, it's no more a secret. I mean, inside dealing is not something you come out with now.
But actually, for you to know that the market becomes transparent and SEC being a PEC regulator, for you to sell, if an insider want to sell, especially if you're a management part of the board want to sell, you notify the exchange. That is how it's done anywhere in the world. Because, you can't say because you're an insider, you won't invest. But if you're, a holder in that company, anything that happens, that's why we have close period when earnings are coming, that so period, every stakeholder in this company, especially of staff, MD, manager, won't buy this stock for so period because they know that you have information because you are within them. You get it now? That's why all these are way of controlling insider dealing. But to rule it out, outrightly, I can't say. But that is why SEC is going further to automate capital market operation. Why are they doing that? So that they can nip it anything at the board. From if you look at matured markets, especially like we use the US as an example, they don't need to run after you because everything is computerized. They see your back end from their office. That means anything that happens, they know. For that, I think SEC taking this bold step. They might also have their own operation within there in Abuja. But for them to see capital market, they want to automate the capital market. That means they are going beyond their own, looking at seeing the back end of the market operators, the quoted companies from their own office. That means anything you are doing, they will know. If you fight document, they know. If you don't fight, they will know because they are seeing you from the. It's a good one if they can actually take that giant step and implement it. That anywhere they are, they can sit and control what is happening. And when you are complaining, like inside, there's a kind of infraction between you and they can easily know when you are complaining. They have seen what happened. It makes things easier. That is how they can police the market. That can not really control the market, so that as a regulator, nobody will take advantage of each other. Especially the shareholders will not. Director will not take advantage of shareholder. Operators will not cheat investors. All these are things. These are the work of regulator to know that, and not only that, they make sure that this market is what we use to drive our economy. When it is transparent, people are coming and see that the activities of capital market will sustain the economy. That's why I think the step the new DG is taking, I would say, is in the right direction. It's a welcome development. No, when you automate the whole capital market operation, it makes things easier for you.
Okay. How feasible do you see this happening? Because it's beautiful when we write things on paper and say, I want to do this, I'm going to do this. And when we actually do it.
Yes. Okay, go ahead.
How feasible do you think this would be, like 3 months, 1 year? So that maybe when we come here in 6 months and say, okay, so Ambrose, how far with this digitalization?
I think that the new SEC DG has been an insider because it's one of the executive directors.
Please explain what you mean insider.
What I mean insider, what I mean insider is that it's part of the management as board director in SEC.
Not an insider dealer.
No.
Okay.
No, it's part that he have seen even during the time of the last DG, acting DG. He have seen everything. Also he's been thinking now that the ball is on his court, he know where to play to on his side, know where to play to. For me, he has understand what is happening in the market. Even doing the automation will help even know to improve education in the market. And our market, I would say that participation in our market is still low. Because of what? Many people that got their finger burnt 2009, 2008, they are still not in their own. So because somebody have not gone back to tell them, oh, the market has changed, you can replan. No, I'll say it again now. I'll tell my people that if an adult is running and a fall, the adult will know why it fall. But if a child is running and it fall, you continue, you don't know what for him. But if you have made a mistake, somebody say, oh, because of this, that is why you lost money. This is the way to do it now. This is another strategy. The person will come back with confidence. But when the person is still not losing, that is why we need to take education to their doorstep. And that is what SEC is already also planning to, with all these automation, to make things easier for people to have access to information. That will be good. And on their own side, make sure that they play their role of protecting investor. It's a key mandate to them that they protect investor. That means investor, either foreign, local, the operators will not toy with them.
Thank you, Ambrose. If I didn't know you better, I thought maybe you were now the brand ambassador for SEC. Of course, you're not. You're not.
You know that.
Thank you very much, Ambrose. Of course, this brings us to the end of today's show, Wealth Clinic. The show returns same time next week, Wednesday, 9 to 10. Same station. My name is Olayemi Akonde, and of course, Ambrose Omodio. Thanks for coming.
Thanks for having me.
If you have any questions regarding stock market investment, you can reach out to me on 0806 448 9694 0806 448 9694 and Ambrose
080-281-64085. Again, 080-281-64085. Call me at any time or send SMS.
Anytime, midnight, you will pick it up.
Feel free.
Thank you very much. Enjoy the rest of your day and please remain safe. Goodbye.